Morning, guys. Good morning. Good morning. Can you hear me? Good morning. How are you doing today? If you can hear me, please drop a comment. Can you hear me loud and clear? Good morning. Good morning. Please confirm the sound is okay. Good morning, Mr. Raphael. Good morning, Mr. Amuda. How are you doing, Mr. Amuda? It's been a while. Morning, Mr. William. Victory morning. How are you doing? Mr. Amuda, it's been a while. Hope you're fine. Good morning, guys. Good morning. If you have any question, drop it in the comment section. If you have any question, if there's any instrument you want us to look at together, please drop it in the comment section. Please share the link with your friends. Share the link with your friends. Those you know that are interested in learning how to trade Forex. Share the link with them. Share it with them. If there's any instrument you want us to look at, please drop it in the comment section. If you have any Forex related question, drop it in the comment section. Good morning. So let's start by looking at the fundamentals. Today is 4th of April, and we're expecting NFP from the United States by 1:30. Okay, 1:30 p.m. We can say by 12, this should be 1:30 also, releasing their employment, also employment rates by 1:30, and the United States we're expecting average hourly earnings, non-farm employment change, and also unemployment rate. So we should expect high volatility on Canadian dollar pair and also United States dollar. You can also see by 3:25. Powell will be speaking by 3:25. So we should expect high volatility in the market. The market has been volatile the past 2 days now. Market has been volatile, very volatile. As you can see, the dollar pairs has been very volatile, which is a result of the of Trump's speech that he gave. I think it was 2 nights ago. Yeah, that's the reason for the high volatility in the market. Okay. So let's look at DXY. What's the dollar? So yesterday was strongly bearish. DXY was strongly bearish, and as you can see, a fair value gap was created after the breakout. You can see this breakout. There was a breakout from this support. I think that support was last week's support. And there was a breakout from that support, and it created a gap. You can see this fair value gap it's created here. See the fair value gap that was created. So it's most likely price will want to retest this fair value gap. Okay, it's likely price will retest that fair value gap before DXY will continue with its bearish move. That's my expectation on DXY. It's likely going to come and fill this fair value gap before continuing with its bullish bearish move. I hope that is clear. That's my take on the dollar. I'm bearish on the dollar at the moment. Okay, for today's market, I'm bearish on the dollar. Okay, but I'll consider going bearish on DXY after this fair value gap. Okay, so at the moment, this is a bullish setup on 4-hour time frame, 1 hour time frame, 15 minutes time frame. Setup we have here is bullish. You can see the pattern we have here on 1 hour time frame. We had an hammer here, and the next candle closed as an engulfing candle. This morning, price pulled back to fill the fair value gap. You can see the fair value gap is created here. Can you see this fair value gap? So this would have been a good entry for buy on DXY. This would have been a good entry. After price failed the fair value gap, you can see the pattern that formed. We had an inverted hammer and the next candle closed as an hammer. So this would have been a good buy for DXY. Okay, this would have been a good buy, a good entry for bullish on DXY. I hope you get that. So at the moment, DXY is buying, likely going to come fill this fair value gap. So if you're going bearish, if you want to go bearish on DXY, you should wait for price to fill this fair value gap. Okay, after price fills this fair value gap, wait for a bearish reversal pattern to form before you sell DXY, before you sell dollar. I hope that is clear. I hope that is clear. So let's look at currency pairs. Let's start with GBP USD. If there's any pair you want us to look at, please let me know in the comment section. If there's any pair you want us to look at, please let me know in the comment section. So let's start with GBP USD. Start with the daily time frame. So you can see yesterday candle closed bullish, closed strongly bullish after filling this fair value gap. Filling this fair value gap on the daily time frame. Can you see this? So it didn't fill it completely, but it has tested that fair value gap. You can see. Can you see that? So after the formation, after the close of yesterday candle, let's see the pattern we had on 4 hour, so that you see the reason why the GBP USD has been bearish. So you can see the pattern that formed on 4 hour time. We had a shooting star, and the next candle that closed after the shooting star closed bearish. So the best entry for GBP USD would have been the close of this shooting star. That would have been the best entry for sell on GBP USD. And you can see that the market is currently trading about over 100 pips. You can see over 150, 119 pips from this level. This would have been the best entry. So what you would have done here is go down to, after the formation of the shooting star on 4 hour, I've gone down to the next time frame, which is 1 hour. Let's see the pattern we had on 1 hour. So you can see the pattern we had on 1 hour. We had a shooting star. This was a shooting star, and after the formation of the shooting star, a support was created. You can see the support. So one would have patiently wait for 1 hour candle, which is this candle. Okay, one would have patiently wait for this candle to close before going bearish on GBP USD. Okay, so at the moment, GU is still bearish, but you don't want to sell GU from the market price. You don't want to sell GU from the current market price, because it's likely going to come back. GU is likely going to come back to this fair value gap it's created here. Okay, it's going to come back to fill this fair value gap, and also we still have a fair value gap above this. You can see this fair value gap. So these are the areas you should be considering going bearish on GBP USD. Okay, these are the areas you should be considering going bullish on GBP USD. And if you go to if you apply your Fibonacci tool from this swing low, this swing high, you can see that the price is currently at a discount area. Okay. That price is currently at a discount area, and at that discount area we have, I think we have a fair value gap. We have a fair value gap here. And I think we also have a tiny fair value gap here. See this. Let's go down to 1 hour time frame. I'm sure there's a fair value gap here on 1 hour. Let's confirm that. So you can see on 1 hour we have a fair value gap here. So price just tested that fair value gap. You can see that. Okay. If I'm going to take any risk on GU this morning, it will be a buy. Okay, it will be a buy and not sell. It will be a buy. I will take advantage of the pullback to this premium area. I will take a buy, okay, to this fair value gap. Okay, so I'm bullish on GBP USD. That's for London session. I am bullish. I'm looking for a buy opportunity on GBP USD. And if I'm going to buy GBP USD, DXY must be bearish. Okay, DXY must be bearish. I need to wait for a sell setup on DXY. You can see DXY is still bullish, so I can't buy GBP USD because the dollar is still strong. So for me to sell or to buy GBP USD, dollar must be weak. I need to wait for a bearish reversal pattern to form on DXY before going bullish on GBP USD, Euro USD, Australian dollar USD, NZD USD. I hope that is clear. The dollar is still bullish. You can see it on 15 minutes and also 1 hour time frame. Okay. Which other instrument do you want us to look at? Let me know in the comment section. So that's my take on GU. Okay. Okay, let's look at Euro USD. Euro USD. Euro USD is at premium area. You apply a Fibonacci from this swing high on the daily time frame. You can see USD is at a premium. Is at premium. You can see that it's filled a fair value gap. You can see the fair value gap on a daily time frame. You can see Euro US just filled this gap yesterday. And after filling the fair value gap, you can see the strong rejection from that zone. Can you see it? Strong rejection from that zone, indicating that the trend has changed from bullish to bearish. There is high supply. Okay, the supply is higher than demand. So let's go down to 4 hours after the close of yesterday candle. You can see the pattern we had on 4 hour time frame. And this morning, you can see a support was created yesterday. Can you see the support that was created yesterday? This morning, you can see this candle broke out from that support. This tells me supply is more. Okay, supply is higher than demand. Also, you would also see that the market is trading below the low of this bullish candle. Can you see that? Can you see that? Break out from this support and also break out from this candle. Can you see that? Now it has created a fair value gap on 1 hour. I would expect price to pull back. That's my expectation. I would expect price to pull back to fair value gap before going bearish on Euro USD. Okay. Before going bearish on Euro USD, I want to see price fill this fair value gap. This needs to be filled. Okay. So Euro USD is likely going to come fill this fair value gap, which is at a discount area. Can you see this? It's likely to fill this fair value gap. If bullish. That's my expectation on Euro USD. Or I would like to see price fill this fair value gap before going bearish on Euro USD. This would have been a good entry for Euro USD. And as you can see, the market pips below that level, 70 pips below that level. So entering a sell from the current market price is a very high risk. If you had entered sell from this point, your stop loss would have been at this level, let's say 70 pips. And by now you would have made at least 1-to-1 risk reward on this trade. But if you're in a sell from the current market price, your stop loss will be at this level, which is 100 and something pips. And your TP is at this level. You can see that the risk is higher than the reward. You can see the risk is higher than the reward. So It's best to wait for price to pull back, fill this fair value gap before you sell. I hope that is clear. Is there any other instrument you want us to look at? Let me know in the comment section. You guys are not responding. Can you guys hear me? Can you hear me? I want to see your comments before I move to the next pair. I want to be sure I'm not speaking to myself. Can you all hear me? All right, all right, all right. Okay. Let's move to the next pair. Let's look at JPY, GBP JPY. GBP JPY has been bearish. Not yesterday, I think. Yeah, yesterday it was bearish. Let's see, start from the daily. Strongly bearish. Yeah, yesterday was strongly bearish. I think it did over 200 pips. GBP JPY did over 200 pips. Yeah, close to 300 pips. This is about 200 pips yesterday. It was strongly bearish. You can see, and it's still bearish. It's still bearish. But if we apply our Fibonacci from this swing low to swing, I think price is at a discount area, so I would expect to see price pull back. Okay, you can see it has created a fair value gap. It has created a fair value gap, so I would expect price to pull back before going bearish on GBP JPY. Okay, it is still bearish, but you want to wait for price to pull back, fill the fair value gap, okay, before going bearish. Okay, it's still very bearish. Let's start with let's see the weekly time frame. Okay, so you can see, so it's likely to come from this, which is an area of liquidity. If it breaks out from this low, it would go for this relative equal low. Okay, so that's my take on GJ. GJ is still bearish. Okay, GJ is still bearish. You can also take advantage of the pullback. Okay, just wait for a bullish setup. Wait for a bullish setup, and you take advantage of the pullback. As you can see, I think price is at a support now. I think we have a support here. Okay, price has tested that support. You can see price has tested that support. So if a bullish reversal pattern forms at this support level, you might want to risk buying GP or GBP JPY. Okay, wait for a bullish pattern to form before you go bullish. As you can see, the current 4-hour, it's likely going to close as maybe an hammer. So if it closes as hammer, then you could look for buy. You could look for buy. It closes as an hammer candle. Let's see what we have on 1 hour time frame. 1 hour also is still trying to form an hammer. You can see that. So you just have to wait for the candle to close. You take a trade. Okay. So as you can see on 15 minutes, an hammer has formed on 15 minutes. Can you see hammer has formed on 15 minutes, but we need to wait for 1 hour, 4 hour to close. Okay, before we take a trade on GBP JPY. So I'll be looking for buy setup on GBP JPY. Okay. USD CHF. Okay, USD CHF. So far this week, USD CHF has been bearish, strongly bearish, and price just tested, as you can see, over 249 pips, over 249 pips on USD CHF, and we apply Fibonacci from this swing low to this swing high, you can see that price is at a discount area. You can see that price at a discount area. Can you see that? Price at a discount area, and I think we have, if you ever look up here, can you see this? You sure don't want to sell USDCHF from the current market price. So wait for price to pull. Wait for price to pull back. You can see there's a fair value gap. We have a tiny fair value gap here on the daily time frame. Okay. Okay, so I would expect price to pull back. There's a fair value gap that has been created. You can see all this liquidity void. This liquidity void needs to be filled. Okay, USDCHF is likely going to fill all this liquidity void, and if you fill it, to break out from this support. If it break out from this support, then we should expect more bearish move on USDCHF. If it break out from this support it has created, then we should expect more bearish move on USDCHF. Okay, if it breaks out from this support, then we should expect more bearish move on USDCHF. I believe you know USDCHF is negatively correlated with GBP USD, Euro USD. And if we're expecting Euro USD to pull back, if you're looking for buy opportunity on Euro USD, you should be looking for sell on USD CHF. So if it breaks out from this support, then we should expect more bearish move. I hope that is clear. Okay, a few minutes. We'll look at Australian dollar JPY. Okay. Few minutes. Please, if you're yet to give this video a thumbs up, please do that now. Please do that. Give it a thumbs up so that others can get to see this video. Give it a thumbs up so that others can get to see this video. And if this is your first time participating on the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. I will attend to your question in a few minutes, Mr. Raphael. I will attend to your question, just be patient. So that's my take on USDCHF, USDJPY, USDJPY, USDJPY. Okay. Let's start with the daily time. So USDJPY was strongly bearish yesterday, strongly bearish. I shared with you guys a few weeks ago. I think it was last week. I told you USDJPY is likely going to come and fill this fair value gap. Can you see it? Can you see this fair value gap? I shared with you guys. I think it was last week that USDJPY is going to come fill this fair value gap, and that gap has filled. The gap has been filled. So it has been filled, so we should expect a pullback on USDJPY. You can see this liquidity void, this fair value gap it created. We should expect price to fill that fair value gap. Okay. Expect price to fill that fair value gap. I hope that is clear. So what do we have on 4-hour time frame? You can see we had an AMA here and we had several bearish candlesticks after. Now it created a resistance at this point. Can you see this resistance and the previous 4-hour candle? Can you see it closed above this resistance? That indicates more demand than supply. That indicates more demand than supply. And when there's more demand than supply, you expect price to go up. Okay, you expect price to go up. So at the moment, USDJPY is bullish at the moment. It is bullish. Okay, USDJPY is bullish at the moment. Okay, USDJPY is bullish. But let's go on now. If you want to buy USDJPY, I think it has created a fair value gap on 1 hour or 15 minutes time frame. Wait for price to pull back and fill the fair value gap before you go bullish. Wait for a back. Wait for pullback. Let's see. This is 1 hour. Let's see 15 minutes. Okay. So you can see here is JPY, we have this fair value gap here. So you might want to wait for price to pull back and fill this fair value gap before you buy. You can see this would have been the best entry for USDJPY. Okay, this would have been the best entry for buy on USDJPY. You can see what we have here. We had a spinning bottom and the next candlestick closed bullish. It engulfed the spinning bottom. So this would have been the best entry for USDJPY. So if you had bought from this point by now, you would have made close to 80 pips on USDJPY. 80 pips. So you don't want to buy from the current market price. If you buy from the current market price, your risk will be high, okay, compared to your reward. Okay, the risk will be high. You can see you would have your stop loss would have been 30 pips or 35 pips, and you would have gone for like let's say 70 pips. By now you should be out of this trade. So you don't want to buy from the current market price. So it's best to wait for price to pull back. And as you can see, price is currently at a resistance area. You can see it's at a resistance area. So we should expect pullback. And you can see the pattern that formed at that resistance area. It's this is a doji. This is a doji. So if the next candlestick close bearish below the low of this doji, you might see price pull back to fill this fair value gap on USDJPY. I hope that is clear. So that's my take on USD JPY. Okay, Mr. Raphael, that style of trading is called edging. Edging, buying and selling the same instrument at the same time is called edging. Yeah, it is called edging. Some people use that style of trading and they are profitable. So you need to know how to hedge. Okay, you need to know how to hedge. It's a trading strategy on its own. So you need to know how to. Okay, you need to know how to trade with that strategy for you to be profitable with it. Okay, there's nothing wrong with it, but you have to understand the strategy. Okay? You have to understand the strategy. After that strategy in the past, it didn't work for me. Okay, it didn't work. So you need to understand the system. There's nothing wrong with it. There's nothing wrong with hedging, but it's just that some broker will not allow you hedge. Okay, some brokers will not allow you hedge. Not all brokers will allow you hedge. Okay, Mr. Raphael. Most times people hedge, or most traders hedge when the market is going against them and they don't know what to do. When they are confused, that is when most traders hedge. Most newbie traders, when they are confused, that is when they hedge. That is not the right way to trade that strategy. Okay, that's not the right way to hedge. If you execute a trade and the trade is going against you, it means the trade is going against you. You should exit the trade. That's not the time to hedge. If you are hedging after the market has gone against you, then what you're doing is gambling. It's gambling. You don't know what you are doing in the market. You don't know what you're doing in the market. The market will always move in one direction. For the week, there's always a direction. For the day, there's always a direction. If you're working with 4 hours, there's always a direction. It's either go buy or sell. Do your proper analysis, know the trend of that instrument, and just follow that direction. It doesn't make sense buying and selling, buying and selling. But like I said, some people have a strategy, a hedging strategy that works for them. Okay? Yes, you definitely set stop loss. And most that hedge don't use stop loss. But if you have an hedging strategy, your hedging strategy will have a stop loss. It should have a stop loss. If it doesn't have a stop loss, you are just gambling. You don't know what you are doing. You are a confused trader. Like I said, I've tried edging it. Okay, it didn't work for me. And I don't want to build a strategy that will not be accepted by some brokers. Do you get it? I want to build a strategy that will be accepted by all brokers. Do you get it? So I'm building a strategy that will be accepted by all brokers. Exactly, Mr. Raphael. Is there any other instrument you want us to look at? Is there any other instrument you want us to look at? Let me know in the comment section. We can't end the session without looking at gold. Almighty gold. Oh, let's look at gold. Let's start with the weekly time frame. Let's start with the weekly time frame. Okay, so daily. So you can see yesterday candle closed as, should we call this an hanging man or inspiring top? It closed as a bearish candle. Okay, it closed bearish. Yesterday was strongly bearish on gold. So after the close of candle on daily time frame, what do we have on 4 hour? Let's see. So on 4 hour, you can see we had a support here, and that support was broken. It was yesterday. That support was broken yesterday. You can see that, and the market is still trading below that support. Can you see that? The market is still trading below that support. That tells me supply is higher than demand. Supply is higher than demand, and the gold is still bearish. It is still bearish because it's still trading below this support that was broken yesterday. You can see that level tested several times, and there's been a lot of rejection from that resistance level. And you see that there's a lot of rejection from that resistance level. So gold is still very bearish. They are likely going to come for the stop losses residing at low. Mr. Okoro, good morning. Okay. Okay. Yeah, we'll look at Australian dollar JPY. A few minutes, Mr. Amuda. A few minutes. So they are likely going to come for the low residing at the low of this candle. Reason being that a lot of traders would have executed buy, and their stop losses will be residing at this previous low. If you go down to 1 hour 15 minutes, you'll be able to identify a bullish reversal pattern. So you can see this is an hammer. They know a lot of retail traders after an hammer form, the next thing is to buy. The next thing is to buy. You can see that. So after executing buy, where would they have their stop losses? Their stop losses will be at a few pips below the low of this candle, which is liquidity. So they are likely going to come for these lows before buying. So at the moment, it is still bearish. Say bearish. You can see the support it created this morning. The support that was created this morning, you can see it has been broken. Price just tested that broken support on resistance. So there's a rejection from that area. Can you see that? It's a rejection from that area. So you can see there's a rejection from that area. So if price breaks out from this support, this new support it created, if it breaks, then we should expect more bearish move on gold. And as you can see, we have a fair value gap here on gold. So it's likely going to come fit this fair value gap before going bullish. Can you see that? So it's likely going to come fit this fair value before going bullish. Is that any question? Exactly, exactly. Any question? Please remember today is NFP. Today is NFP. If you're trading dollar or dollar pairs, be conservative. Be conservative. This is not the day to be aggressive. Okay? It's not the day to be aggressive. Be very conservative. Okay? So let's Australian dollar JPY. Australian dollar JPY. Uh, Okay, Australian dollar JPY. Um, let's start with the daily. So you can see Australian dollar JPY has been bearish, bearish. It's been bearish for the past 2 days or 3 days now since Tuesday. This was Tuesday. See here we had a doji formed after price tested this resistance level. You can see a doji formed. So that would have been a good entry for Australian dollar JPY. After the formation of this doji, let's go down to 4 hour. So this would have been a good entry. This would have been a good entry for Australian dollar JPY. That would have been a good entry. Okay, so it has done over 200 pips, over 300 and something pips. So you don't want to sell from the current market price. If you are considering selling, you should wait for price to pull back to this zone. That's what I would suggest. If you want to join the bearish trend, you should wait for price to pull back to this zone. As you can see, the previous 4 hour candle closed as an inverted hammer, which indicates change in trend from bearish to bullish. So we might see price pull back to this area before it continues with its bearish. Go down to 1 hour. Let's see after the formation of this inverted hammer, what pattern do we have on 1 hour? Let's see. Okay, so you can see the pattern we had on 1 hour. The resistance was created at this point. So if you want to buy, you want to wait for price to close above the high. You can see this resistance. You can see the reason for the resistance at this point is the high of this. The high of this bearish candle is the reason for this resistance. So if you want to buy, you should wait for 1 hour candle to close above this resistance. Okay, wait for 1 hour candle to close above this resistance before you consider buying Australian dollar JPY. I would not advise that you sell at the current market price. Selling is at a higher risk. If you want to sell, wait for price to pull back to this zone before you sell. And you can also see the fair value gap here. You might also want to fill this fair value gap before going bearish. You can see this fair value gap. So these are the areas you should be considering selling Australian dollar JPY. You can't sell from the current market price. The risk is too high. Wait for pullback before you sell. Okay, and if you're considering buying, wait for 1 hour candle to close above the high of this resistance and the high of this bearish candle before you buy. Is that clear, Mr. Amuda? Is that clear? Do you have any other question? Do you have any other question? Should expect high volatility in today's market. A lot is going to happen before NFP or after NFP. Okay, a lot is going to happen before NFP or after NFP. 1:30, it's almost 11 a.m. So we have just 11, 12, like 2 hours, 30 minutes to go. 2 hours, 30 minutes. And between now and then, price might just be in a range on the dollar pairs. Price might just be in a range on the dollar pairs before NFP. Okay, price might just go into a range. Okay, so that's my take on the dollar pairs. Any question? Do you have any question? Drop it in the comments. Do you have any question? In the comment section. Do you have any question? Is there any other instrument you want us to look at? Let me know in the comment section. Is there any other instrument you want us to look at? Let me know in the comment section. Any question? Any question? Do you have any question? You have any question, let me know in the comment section. If there are no questions, I would have to train. I want to appreciate every one of you for your participation. Thanks for always showing up. The desire is to see every one of you succeed in trading. I've always advised, if you do the right thing, you'll get the right results, okay? Ensure you apply proper risk and money management. Use stop loss on every trade you define the risk and the reward on every trade you execute, okay? Don't gamble in the market. If you gamble in the market, you will lose money. Okay, approach trading, see it as a business. Okay, see it as a business, treat it as a business. If you desire to be profitable, if you desire to be in this game long term, treat it as a business. Treat it as a business. All right, guys, that'll be all. Appreciate you all. Do have a wonderful day. Most likely, I'll come on live on by one or 1:15. Okay, so that we'll see how it reacts to NFP. We'll see the impact of NFP on the market. So expect me by 1:15 p.m. Okay, I'll drop the link on the various social media platforms. All right, bye.